We've seen the Dow take a bit of a dive at the start of the hour to give up its gains, but it's climbing back up 137 points, about a third of 1%. The S&P is almost flat, though, up 3 points, while the Nasdaq is hanging on to a 31-point gain. And that brings us to today's market navigator, Dom Chu. What are we watching?
All right, so Kelly, the shares of the transportation ETF, the ticker IYT, which tracks many of these market kind of weighted technology/transportation type stocks that are in there, are giving back some gains after hitting record highs just in yesterday's session. Now, our next guest is taking a deeper dive into one specific name within transportation and sees more downside ahead. So joining us now is Mike Khouw, the chief strategist over at OpenInterest.Pro. Mike, thanks so much for joining us. If you take a look at the transports, maybe it's not at all out of the realm of reason that after a record high in yesterday's session, we're giving a little bit back today. Do you think there's more downside, and are there specific stocks and ways to play that downside coming up?
Yeah, I mean, it's really a bifurcated story. I mean, I think a lot of the sort of pop that you saw yesterday was a result of United's results, right? So those came out much better than expected, and the entire airline space was generally trading at a very cheap multiple. So, I mean, it's not as cheap now. You get a 15% pop in one day. That's going to change things a little bit. But if you've got a stock that's trading 5.5 times earnings and the news is decently good, you have some material upside. But, of course, the transports aren't just the airlines, and, you know, Delta and United are probably the best two on the airline space. But, you know, we're also talking about the logistics companies, the truckers, and the rails. And so I was taking a look at CSX, which also reported earnings and has also suffered some consequences as a result of the hurricanes that we've seen in Florida and in the Carolinas. And specifically, looking to the Carolinas, it's their Blue Ridge subdivision. So that is the line that goes through Tennessee and the Carolinas that was impacted. They have about $200 million worth of repairs that they have to put in. But you're not really just thinking about the cost of those repairs. You're thinking about how it's going to impact their operations going forward. It looks like Florida is pretty much coming back on. I only saw some minor outages according to their most recent service bulletins. But the interesting thing about CSX is that this company is going to be having an investor day on November 7th. And I suspect that is what fueled a lot of the unusual options activity that we saw today.
And what kind of options activity are you seeing? That unusual activity, is it tilted more towards forecasting downside or upside?
Yeah, it's downside. So we're seeing more than, actually, it's already traded more than 4 times the average daily volume. Puts are significantly outnumbering calls in CSX. And the most active contract actually is looking out to the regular way November expiration. So that's November 15th. And it's the 32.5 puts that are most active. Those have traded on almost 3,000 contracts. Buyers are paying about 47 cents a contract for that. And there's really 2 big catalysts that we can think of that could potentially justify looking out that far, and also the fact that the options are not that expensive. They're only about 1.5% of the current stock price. And we have that November 7th Investor Day, so that's obviously an important catalyst. And that same week, we've got the election. And the downside break even on that trade is only about 4% lower. So if people think that, you know, operational disruptions are going to last a little bit longer, if they think that some of the headwinds, other than the hurricanes that the company has been facing, which includes lower coal costs and things like that, which, you know, hurts that side of their revenue picture a little bit, lower fuel surcharges. So those are all potential impacts, and we're going to learn more about that on the 7th. So
what you're saying is you're seeing buying of this 32.5 strike price put option with a roughly 50-cent premium that you pay to get it. So you'd have to have the stock go down to at least 32 to break even on that trade and make money when it goes below 32. Is that something that you think is going to be a situation that actually unfolds by that November expiration?
Yeah, well, look, I mean, a 4% move in any stock over the course of almost a month, and that's how far out we're looking, is certainly plausible, particularly when you have a couple important catalysts like the election, like Investor Day. And, you know, so you could have a general market pullback that could impact it a little bit. And, of course, we want to get a better sense of, you know, the operational disruptions that the company is going to be facing. And I think they're trying to do their best and manage through a difficult situation in that Blue Ridge subdivision in particular. But, 4% isn't a big move for any stock, especially if you have several weeks for that to take place.
All right. Mike Khouw, OpenInterest.Pro. Thank you very much. We'll see you again soon, sir.